US and UK finalize limited trade deal. Goldman Sachs projects a long China property slump with new home demand remaining well below 2017 peak. And IEA expects global oil demand to grow until around 2030. Welcome to the Economic Bulletin. I'm Hala Al-Hamalawi, and we start off with the United States as the Federal Reserve has reported that U.S. factory production edged up just 0.1% in May. A surge in vehicle and aircraft output was largely offset by weakness elsewhere. The outlook for manufacturing remains clouded by President Donald Trump's tariff policies, which impose significant headwinds on the sector. Overall, industrial production also fell 0.2% last month. The Commerce Department has reported that consumer spending pulled back sharply in May, weighed down by declining gas sales and looming unease over where the economy is headed. Retail sales declined 0.9%, while sales rose 3.3% from a year ago. Excluding autos, sales fell 0.3%. However, excluding a series of items such as auto dealers, building materials suppliers, gas stations, and others, sales increased 0.4%. Miscellaneous retailers gained 2.9%, while online sales rose 0.9%. U.S. President Donald Trump and British Prime Minister Keir Starmer have announced that they had finalized a trade deal, making Britain the first country to secure such a limited tariff reduction agreement from the Trump administration. The agreement reduces tariffs on British automobiles and eliminates them for the UK aerospace sector. Under the new terms, British car makers will receive an annual quota of 100,000 cars allowed into the US at a lower 10% tariff rate, down from 25%. However, the issue of steel and aluminium tariffs remains unresolved. President Donald Trump hailed the relationship as fantastic, while Prime Minister Starmer called it a real sign of strength. The plan for car tariffs is set to take effect 7 days after its publication in the U.S. Federal Register.
And it's a fair deal for both. Going to produce a lot of jobs, a lot of income, and we have many others.
Still in the U.S., Canadian Prime Minister Mark Carney has announced his alignment with U.S. President Donald Trump's view that their two countries should endeavor to finalize a new economic and security deal within 30 days. For his part, U.S. President Donald Trump stated that trade was a key focus during meetings with Canada at the G7 summit. He added that both countries would review his tariffs in Canadian Prime Minister Mark Carney's different concept.
We're going to be talking about trade and many other things. And we have a whole group of people, some traders and some other people.
U.S. President Donald Trump has indicated that he would likely extend the upcoming deadline for China-based ByteDance to divest the U.S. operations of its popular short video app TikTok. Speaking to reporters aboard Air Force One, President Trump reiterated a sentiment that he first expressed in May that he would extend the June 19 deadline. When asked directly about extending the deadline, Trump responded probably yes. He added that probably has to get China approval, but thinks he will get it. He also noted that President Xi Jinping will ultimately approve it. Thailand's finance minister has said that his country will submit its formal trade proposal to the U.S. this week, with initial online discussions set to begin. The move aims to head off the threat of higher U.S. tariffs. Thailand faces a 36% U.S. tariff if a reduction isn't negotiated before a 90-day pause, capping tariffs at 10%. Expires in July. Finance Minister confirmed the start of talks as the country seeks to address its trade imbalance and boost its sluggish economy. The minister emphasized that the proposal aims to address the trade imbalance, enhance market access for U.S. exports, and tackle transshipment violations. On a global note, the World Bank has reported that less than half of working-age women are employed across the Pacific Islands due to outdated laws and other barriers, adding that closing the gender gap could boost economic growth. It noted that boosting female participation to the same level as men could lift the region's gross domestic product by 22%. The report highlighted that the gender gap in the labor market exists despite women attaining similar education levels as men, and could be partly attributed to social norms. It also emphasized that 6 countries did not have paid paternal leave, often forcing women to leave the labor force when they started families. Reuters has reported that the group of 7 leaders provisionally agreed on a strategy to protect critical mineral supplies and bolster their economies. The move follows China's decision in April to suspend exports of various critical minerals, which disrupted global supplies. The G7 aims to anticipate shortages, coordinate responses to market disruptions, and diversify the mining and processing of these vital materials. The leaders stressed that non-market policies and practices in the critical minerals sector threaten their ability to acquire many critical minerals, posing a risk to economic and national security.
I'm pleased all leaders are here.
Moving to Europe, the European Commission has announced plans on June 17 to legally ban all EU imports of Russian gas and liquefied natural gas by the end of 2027. The EU Energy Commissioner said that the measures allow companies to invoke force majeure to exist contracts. The phased ban starts in 2026, targeting new contracts, with short-term deals banned from mid-2026, long-term contracts ending by 2028. The move aims to end Europe's reliance on Russian energy following the Russian-Ukrainian war.
New contracts will be banned as of the end of this year.
In North America, Goldman Sachs has stated that demand for new homes in China is likely to remain substantially below its 2017 peak for the foreseeable future, projecting a long property slump for the world's second biggest economy. The investment bank forecasts new home demand will likely be less than 5 million units per year, a significant drop from the 2017 peak of 20 million units. China's property sector, which once accounted for roughly a quarter of economic activity, entered a prolonged downturn in 2021. Goldman Sachs attributes this revised outlook to factors such as negative investment demand and a reduction in demolitions due to the government's shift towards urban renewal. Canadian Prime Minister Mark Carney and Japanese Prime Minister Shigeru Ishiba have reinforced their country's strategic partnership during the G7 Leaders Summit. Carney highlighted that these ties were expanding, covering areas like LNG, hydrogen, and critical minerals, alongside shared interests in global peace and security. Additionally, Japan's Ishiba hoped to realize an early signing of information security agreements, as well as the agreements on defense equipment and technologies transfer. He further stated that beyond the existing Japan-Canada agreements, they aimed to boost security cooperation.
Prime Minister to Canada, to the G7, to further deepen the great and very strong ties.
In Asia, the Bank of Japan has kept interest rates steady, opting to slow its balance sheet reduction. This signals a cautious approach to ending stimulus amid escalating Middle East conflicts and U.S. tariffs. The bank governor warned of rising oil prices from the Israel-Iran issue and potential impacts on inflation. He also cited U.S.-China trade tensions as a downside risk. The central bank faces a dilemma of delaying rate hikes risks rising inflation, while current tariffs hurt Japan's export-heavy economy. Egypt's Prime Minister Mustafa Madbouli has announced the House of Representatives ratified the free trade agreement with Serbia. The agreement will gradually eliminate customs duties and quantitative restrictions on imports and exports between the two countries. Madbouli highlighted that the deal goes beyond goods trade to include cooperation in services, investment, technology transfer, and dispute resolution, creating an investor-friendly environment and opportunities for joint projects. He also noted a significant rise in bilateral trade from $94 million in 2022 to nearly $300 million in 2024, expecting further growth once the agreement takes effect. Qatar has stated that its gas production at the South Pars field is steady and supply is proceeding normally after the world's largest gas field was struck by Israel on Saturday, prompting Iran to partially suspend its production. Qatar Foreign Ministry spokesman Majid Al-Ansari stated that the situation in the North Field was currently safe and gas supplies and production were proceeding normally. He added that so far gas supplies are proceeding normally. However, the ill-advised targeting raises concerns for everyone regarding gas supplies. Al-Ansari reiterated that the security of the Strait of Hormuz and the Gulf in general was integrated to international energy security. Saudi Arabia's annual consumer inflation edged up to 2.2% in May, with rental prices emerging as the principal driver behind the increase. The General Authority for Statistics stated that on a monthly basis, the consumer price index remained stable in May 2025, recording 0.1% increase compared to April 2025. Gasstat also revealed that the uptick was fueled by an 8.1% rise in housing rents, including a 7.1% increase in villa rental prices. The Federal Competitiveness and Statistics Center has reported that the United Arab Emirates' real gross domestic product reached 1,776 trillion dirhams in 2024, marking a 4% increase compared to that of 2023. Non-oil GDP grew by 5%, totaling 1.34 trillion dirhams, while oil-related activities contributed 434 billion dirhams to the overall economy. The transport and storage sector was the fastest growing segment in 2024, expanding 9.6% as airports handled 147.8 million passengers, an increase of nearly 10%. The construction sector grew 8.4%, driven by infrastructure investment, while financial and insurance activities grew 7%. Hospitality recorded a 5.7% increase, and real estate expanded 4.8%. Israel's energy ministry has said that it does not anticipate a fuel shortage following an Iranian missile strike on the Bazan oil refinery in Haifa. The ministry emphasized that fuel stocks were secured in advance, and despite damage to the refinery, fuel supply to companies will remain steady. The Bazan group confirmed the deaths of 3 employees and significant damage to a power plant critical for steam and electricity production. All refinery operations have been halted. And ladies and gentlemen, this is just in. Breaking news: Iranian media has reported a new wave of missile strikes launched against Israel. Moving on with our bulletin, the International Energy Agency has expected global oil to continue growing until around 2030, despite a projected peak in top importer China by 2027. It maintained its prediction that global demand will peak at 105.6 million barrels per day by 2029, then slightly fall in 2030. This contrasts sharply with producer group OPEC's view that consumption will grow much longer. Global production capacity is also forecast to rise significantly, reaching 114.7 million barrels per day by 2030. Continued growth is driven by factors like cheaper gasoline and slower electric vehicle adoption in the United States, offsetting China's earlier peak. OPEC has expected the global economy to remain resilient in the second half of 2025, while trimming its forecast for oil supply growth from non-OPEC Plus producers in 2026. In its monthly report, OPEC maintained its global oil demand growth forecasts for both 2025 and 2026, despite recent trade concerns, noting the economic outlook was robust. The group now projects non-OPEC Plus supply to increase by about 730,000 barrels per day in 2026. OPEC emphasized that a strong economy coupled with a slowdown in non-OPEC Plus supply growth would help balance the oil market, which has faced pressure from U.S. shale expansion in recent years. Oil prices were driven higher on Tuesday by the Iran-Israel conflict, though major oil and gas infrastructure and flows have so far been spared from substantial impact. Brent crude futures gained 2.03% to $74.72 a barrel. U.S. West Texas Intermediate crude was up nearly 1.78% at $73.05. Both contracts rose more than 2% early in the session, but also retreated in volatile trade before bouncing back. A World Gold Council survey has revealed that central banks globally expect to increase their gold holdings as a proportion of their reserves over the next 5 years, while anticipating lower dollar reserves. The survey found 76% of central banks foresee higher gold reserves, driven by its performance in crises, diversification, and inflation hedging. Nearly three-quarters expect lower dollar reserves. It noted that gold's performance during times of crisis, portfolio diversification, and inflation hedging are key drivers for plans to accumulate more gold. Potential trade conflicts and tariffs were cited by 59% of central banks as relevant to their reserve management. And for further analysis, we are joined from Moscow by visiting lecturer at the Higher School of Economics in Moscow, Mr. Rami Al-Qalyoubi. Welcome to Qnews Economic Bulletin. Mr. Rami, the IEA and OPEC disagree on peak oil demand. Which forecast seems more likely, and what are its implications for the markets?
Actually, the situation changes very fast. Just a few days ago, we could assume that the demand on the oil will go down because actually the trade wars between the United States and China had its effect. But now, after escalation in the Middle East and Israeli strikes on Iran, there is an impression that there is like a state of disturbance in the market, because many analysts say that Iran may someday close Hormuz, and in this case the prices will get up. So now many countries or many purchasers could be in a hurry to sign more contracts to get sufficient oil before any possible disturbance in the supplies.
Mm-hmm. With global oil supply capacity potentially exceeding demand by 2030, in your opinion, how will this surplus impact oil prices and market stability?
Actually, after the first Israeli strikes on Iran, the oil prices jumped 13% and reached $78 per barrel for the first time since January. But later, when the situation did not go to a sort of war, the prices decreased a bit, but they are still higher than $70 per barrel, which means that the markets do not expect further escalation and think that it will remain like a war by air strikes and missile strikes without full-fledged war.
Mm-hmm. So how vulnerable are IEA and OPEC forecasts to geopolitical disruptions, especially in the Middle East?
So actually, it depends on the scenario of the development of events. in case of further escalation, the oil prices will go higher, and the consumers will be in a hurry to purchase more oil. But on the other hand, if there is desescalation or even the confrontations becomes more stable, in this case we might witness some decrease in prices and in the demand as well. So, and this is why the approaches are different. They differ upon different expectations.
Thank you so much, Mr. Rami Al-Qalyoubi, joining us from Moscow. And now we go live to a speech by the Iranian representative in the Security Council.
Our responsibility, our response is solely aimed at deterring further aggression and preventing the repetition of such crimes. I thank you.
I thank the representative of the Islamic Republic of Iran for his statement, and I give the floor now to the representative of Yemen.
يطيب لي في البداية يطيب لي أن ألقي هذا البيان.
I have the honor to deliver this statement, Madam, on behalf of the Arab Group. We thank Ms. Roshdi and Ms. Msuya, as well as Ms. Amni Khulani, for their briefings. Madam President, the Syrian Arab Republic is undergoing a critical transitional phase marked by many challenges at the economic, social, and security levels, and this directly impacts the stability of state institutions and the prosperity of the Syrian people.
Resuming our economic bulletin, in markets, global shares were mostly lower today as major indices across the U.S., Europe, and Asia saw declines. In the U.S., the S&P 500 dropped 0.20%, the Dow Jones edged down 0.02%, and Nasdaq futures declined 0.24%. European markets also felt the pressure, with the UK's FTSE 100 down 0.40%, France's CAC 40 dipping 0.72%, and Germany's DAX lessening 0.93%. Asian markets, meanwhile, saw mixed results. While Japan's Nikkei 225 climbed 0.59%, the Shanghai Composite Index edged down 0.04%, and Hong Kong's Hang Seng decreased 0.34%. And that brings us to the end of our economic bulletin, and here is what we have been covering. The US and UK finalize a limited trade deal. Goldman Sachs projects a long China property slump, with new home demand remaining well below 2017 peak. And IEA expects global oil demand to grow until around 2030. And this concludes our economic bulletin. Don't forget to follow Q News on YouTube, Facebook, X, Instagram, and TikTok at QNewsEG to stay informed. I'm Hala Al-Hamalawi. Thank you so much for watching, and stay tuned for more updates here on Q News.